Hey traders, in this lesson we're going to create a very simple tool using the ATR indicator value. So what you see on your chart right now is my script drawing a line 1 ATR below price, the low of price action, and 1 ATR above the highs of price action. The purpose of this tool is to act as a trailing stop loss. So let's jump into a blank script and I'll show you how to do this. So here we are on a blank script. You'll notice I have an open trade here on a live testing account. This is just an account I use to test new strategies. I bought pound Aussie last week during consolidation here down at the lows here because price was testing a 50 EMA on the daily chart and holding it as support. So I bought this market anticipating a breakout. We got the breakout, but now what? Where do I exit my position? I have a target up at these highs on the daily chart here. Since price has reclaimed the 50 EMA, there's a decent chance that price will continue to trend higher now. But if it doesn't, I don't want to lose too much of my open profit on this test trade. So one way I can lock in more profit is using a trailing stop. And that is what I'm going to show you how to do today. So the first thing we need to do is get some user input, or one user input. That's going to be our ATR multiplier. So I'll use the input.float for this, and I will set the title to ATR multiplier and the default value to 1.0. So we'll deal with a 1x ATR trailing stop to begin with. But you can change that obviously if you want to. The next thing we need to do is get the ATR value. That's pretty easy. We just need to create a new variable here called ATR, and we need to retrieve the ATR value from the TA, technical analysis namespace. So TA.ATR, and then I'm going to pass in a 14 period length into this ATR function. So we have our ATR value. The next thing we need to do is calculate our trailing stops. So we need a long stop and a short stop. And the long stop is the low minus this times the ATR. So by default, we're just subtracting one ATR value from the low. So for that, we need to write low minus, open parentheses, ATR times our multiplier. So ATR multiplied by the multiplier will give us, if we subtract that number from the low of price action, we get our long stop. And it's the same for shorts, except we're adding it to the high, ATR times multiplier. There we have our long and short stop value. The final thing to do is draw this onto the chart. And for that, I'm going to use two plot functions. I'll just copy and paste these over to save time. We have our long stop and our short stop colored in green and red. So now if I save my code, minimize my editor, here is our trailing stop indicator. So if I zoom in a bit here, we're on the 4-hour time frame, which was the time frame that I bought this market on when it printed this bullish engulfing candle within consolidation. And so now if I wanted to use this to trail and lock in profit on this particular trade, the way I would use it is because this indicator draws on every single candle on our chart, and the point of a trailing stop is to lock in more and more profit. When this value dips lower, I do not move my stop loss down, otherwise it would never get hit by price action until I got a margin call and my account was wiped out. So what I would do is I would look for the highest value so far on price action, which would be this bar right here. That is when the ATR was at its highest value. I would look at that value, so 1.86137, and I just edit my trade. My stop loss to 1.8, I've already forgotten, 1.86137. 6137, modify, and there we have it. We have now locked in some profit at the high of this trailing stop. So we have moved our stop loss to 1 ATR, one average true range value from the recent swing low. And I can just continue trailing the stop loss up and up until it gets hit or price manages to make it to my profit target. And then we essentially have a win-win situation. Either I get stopped out for a profit that's smaller than my main profit, but maybe price just rolls over here and this turns into a break-even or losing trade. Or maybe, since we don't know what price will do next, the next candle could rocket up and hit our take profit. Who knows? Using this method of trading, which is my preferred method for most of my strategies, I like to let the market tell me when to get out of my trade, because I don't know what price action is about to do next. I know what entry reasons I can use to get myself in a favorable situation, but I don't know how each trade is going to play out. This is one way we can create a useful trading tool in PineScript. Very simple, only a few lines of code here, and we have a trailing stop indicator that we can use in our trading. In future lessons, I will show you how to create actual trailing stops where you can click on the chart and it will start trailing a stop loss from where you click. I will also show you in the automation section how to automate your trade management if you're a Forex trader or you use Pine Connector or AutoView in your trading. But for now, that will do it for this lesson. I will speak with you in the next one.